Welcome to the show we like to call For the Love of Real Estate, where we dive into what it means to buy or sell a home in today's world. Join host Jill Elliott, Dallas broker associate and former radio personality, as she marries her two loves, radio and real estate. She's going to have you asking yourself, for the love of real estate, should I tackle my fears and buy, rent, sell, or remodel?
Hello and welcome to For the Love of Real Estate. This is sort of my lifestyle podcast, as if two people are having a conversation and you get to listen into it. I have a great guest today, Cara Hawkins, branch manager with Guild Mortgage in the DFW, Dallas-Fort Worth area and beyond. Cara and I were chatting at our women's networking lunch that Lauren and Christy with Capital Title put on. And I was like, please be on my podcast. Cara, you have so much knowledge, and I just think that interest rates are the man of the hour or woman of the hour right now, and that's what everybody's talking about. And you were just talking so much interesting information, and so I just wanted to say welcome, but I still want to talk about you first, because you're amazing on so many levels besides what you do every day as a mom, as just a person in the community. And I think that there's something to be said for that. So how was that for an intro?
Oh, well, I don't know if I can live up to that, but thank you.
Yeah, you can.
I'm certainly happy to be here. And, everyone loves talking about themselves and interest rates especially. But with me, I guess.
So when we say that, houses and now, when I know, especially Dave Ramsey, prices aren't going down.
Big topic for me is my kids. I am a mother of two, very, very busy mother of two, between real estate and then having two teenagers. That's always fun. My 14-year-old is a freshman. She is a high school cheerleader and Miss Socialite and just the sunshine
just darling
of life.
On top of that.
She is never met a stranger for sure.
You know what? You might find this hard to believe, but I was a cheerleader in high school.
No, I do not find that hard to believe. You were the captain of the cheerleaders, I promise.
Not that far, but yeah.
You're still a cheerleader.
Oh, you know what? I really am. I love seeing other people do well. I love hearing other people's stories, especially we were talking about the networking group. And you know what? You said something to me that was so cool one time. And I don't even know if you remember, but you said, when I see your son's videos of gymnastics and everything he does, I show it to my kids for motivation. And I was like, really? Do you that is so sweet. But I look at your kids and I'm like, I see so much motivation in them, but I see that from you. I like the fact that as a lender, you would do the same thing.
Yeah. It's so crazy now. I started showing them Jack, I guess, probably a few years ago when he was doing college gymnastics. And
well, no, it was high school, just high school.
Was that?
Yeah.
Oh, gosh, he must have traveled everywhere.
Oh, God, you have no idea.
Well, and now I have a college athlete. My son plays football at the Air Force Academy. So that was a crazy transition. But I don't know. I think athletics shows discipline and things like that for kids. So, those are the things I want to see in my kids. Those are the things I want to see in everybody. But I have to first start with myself.
Well, yeah, exactly. But I think sometimes we like to do that for other people, which you do, because people think, oh, yeah, they applied for a loan and then everybody goes home. But there's so much to it. You have to get to know them. You need to know their stories. You need to know how to help them. I say you should have facts, because if something comes up, oh, yeah, I forgot to tell you I bought that car. You need to know, and then you can work with people. But let's kind of talk about what people say probably to me and you every day is, I think I may want to wait till the interest rates get better. But the way you were describing it, I want you to sort of go into that, because waiting, it might be for you, but it may or may not be the best option. And that's what we want to do today.
So there's really two, I guess, classifications of people I talk to on a daily basis. One, they don't have any idea where interest rates even have been. So there's no starting point to know where rates are. And then secondly, when you're talking to someone who's done a ton of research or a move up buyer or someone like that, they understand that rates, are a little higher than they have been over the last 12 months. In 2020, rates took a significant drop and they stayed down really until about 7-8 months ago. People saw those advertisements in the market, or they even maybe purchased a home 2 years ago, something like that. So they understand what the jump in interest rates means to them.
Yeah, it just may not be Right. Because like you said, these interest rates may take a few $100 out of your pocket every month, but the appreciation is what you need to keep in mind because real estate really is long term. I mean, it's still amazing. I'm working with a seller right now. And after 2 years, she has like 100K equity in her home. That is insane. But, you bought it right. And so that helps. But you were talking about how there's an example like of a $400,000 house. If you have a 3.5% interest rate, it's this. And if you want to get into that, I think that really helps explain to people why it's important to just not look at the rate.
Right. So, the interest rate difference, we were just running some examples based on certain price points. And yes, with the rise in interest rates, we might see a payment difference of $200 to $300, just depending on what the price point is. Okay. Average price point probably in our area is what, 500,000? Somewhere in there,
now
I would guess.
Yeah.
Yeah. It didn't used to be that high, but that's where we're at right now, which to our point, that's a great thing, right? Because that means homes are appreciating. So when we looked at a payment, maybe $200 to $300 higher over a year period because the interest rates rose, they are fluctuating all the time. But in that same year period, based on the appreciation that we're seeing in this area, that $500,000 home may be worth $600,000. So, maybe you pay $2,400 more a year, $3,600 more a year, $4,800 more a year, but you gained $100,000 in equity, sometimes at a minimum, because I've got clients who have appreciated far more than those percentages, depending on what areas you live in. So, we've just been trying to, one, help people understand the tax benefits. Mortgage interest is tax deductible. That's something that you don't have as a renter. You don't have any of those deductions. Higher interest rate actually means a higher deduction.
It does. It does. You're going to be surprised on your taxes a little bit of what you can deduct.
Right. And then maybe there is a cost to waiting. And the cost to waiting is that same $500,000 house could be selling for $600,000 or $650,000 a year down the road. So the cost of waiting far outweighs a difference in interest rates. So that's the true cost of waiting. And you're going to have to pay for housing somewhere, right? Unless you're living in mom's basement, you've got to pay rent. And the rent factors are exploding. The percentage that rents are going up every year. And a lot of times people don't understand that a mortgage payment is likely comparable, sometimes even less than what you would actually be paying in rent every month. So I get surprised people every single day. They're like, oh, wow, I can get a $300,000 house for the same price as what I'm paying for a 2-bedroom apartment.
Isn't that crazy? Like sometimes that apartment is up on the 3rd floor or something and you have to walk up it, things like that. I mean, you need to look at stuff like that and how it's going to affect moving forward. Are you going to be able to save enough? And I think if you do have to live in mom's basement, make sure you're saving so you can get out of mom's basement. So I was helping someone and I think they were looking at these condos and it was around like 265. I remember we put in an offer and of course, he didn't get it, but that's okay. But it keeps going up. So every time there's a new one, it's always higher. And then it keeps getting higher. And then someone redid one and guess what happened? It got higher. So that's what it is. Now, I'm seeing a lot of houses come down in price. For example, in the Frisco area where so many people want to be, I think yesterday there was 565. I can't believe that. I remember there was like 50 or 10 single family homes. And this isn't all price points, right? And most of them, though, I think what the key is so many people think that you should just be able to move in and the carpet should be perfect and the granite should be perfect. And you're not always going to get that. It's about location. I think that location rule always stands. You have a great house in a not great location, you're not going to like it. But you can fix the one in the good location, right? And there are lots of loan programs that you guys are doing now to help people, like if they did want to stay in their house or whatever, like if they decide, okay, I'm not going to sell, I'm going to stay, they probably have more equity than they think, right?
Yeah. We've got a lot of clients right now, even with rates being up that are refinancing and taking advantage of the equity in their homes. So, a lot of people don't necessarily want to enter the market right now. That's okay. But what they're doing is they're like, well, I would love this house if it had this, or I would feel more comfortable with my monthly payments if I could pay off this debt. Well, I think a lot of people don't realize that you can use the equity in your home for both of those things, even a combination at the same time. I had a client yesterday and they wanted to build an outdoor kitchen in their backyard. So we figured out how much equity they had. In Texas, we can lend lend up to 80% of the home's value. So they were able to pay off 2 credit cards, which ended up saving them a couple $100 monthly. And then also we were going to give them $30,000 cash, just it's literally a wire or a check in your pocket to build that outdoor kitchen. So I think that there's a lot of things out there that people don't realize they can do. Paying off debt, even with interest rates being where they are, it still makes sense. If you have credit cards that are at, 19%, 20%, 25%, that far outweighs a 5% interest rate just on a year over year basis. So just getting the word out to people on, ways they can access the equity, that's huge.
Yeah, I saw it somewhere where you said, I think that people can take that equity and maybe use it towards another property, like maybe a second home or something for their kids that they can rent while they're going to college or something like that. Which, could you always do that before? I didn't know if a long time ago, maybe, probably. But anyway, my point is just that you have so many options, and talking to you, you can tell them, because some people might think, oh, I don't have a big enough down payment. I don't have this. I don't have this kind of credit. I don't have that. And they might be pleasantly surprised.
Right. We literally do not turn anyone away. If the credit is not where it needs to be the day that, we see the application, we help with the credit. There's programs that we use where we go straight to the credit bureaus and run scenarios that say, if this debt is paid off, this score will be X. If this debt is paid down, it's an exact science. I know credit is a very questionable subject to a lot of people. So it's a shameful subject to a lot of people, especially over the last few years, everything that people have gone through. So, we're very sensitive to that. We understand it. We see it every day. Same thing with down payment. Life happens. You got to put new tires on the car. You've got to pay for an unforeseen medical expense with a child or, something like that. There's a lot that can, hinder the savings piece for the down payment. But there's tons of programs out there. There's down payment assistance programs out there, depending on qualifications, credit wise and income wise. There's low down payment options. First time home buyers on a conventional loan can put as little as 3% down. Veteran clients, that's still a 0 down loan. USDA clients, that's still a 0 down loan. I think people have that 20% stigma still. 21 years of doing this. And literally people ask me every day, do I have to put 20% down? That question still amazes me. I don't know who told them that or where they heard it. Maybe their parents, I don't know. But that's simply not the case. And in fact, I think a lot of wealth managers, people like that would probably say, please don't put 20% down. Keep your money, elsewhere, things like that, because your home's going to be appreciating at a very high level.
Well, what the difference in payment is sometimes too, because that's what they think. And that's what I think is kind of interesting, is that they think, oh, if I put an extra $10,000 down, my payment's going to change. But you could keep that in your pocket and change those granite countertops or change something in the house. And going back real quick to what you said about the barbecue and they put an outdoor kitchen, I guarantee you, if you enjoy that for a few years and you stay in that house, that outdoor kitchen is going to be something that helps sell that house.
Absolutely. I think people walk straight to the backyard sometimes when they go to look at home.
Yeah, I say since 2020 especially, and I've always been sort of an outdoor person, but the outdoors is the new indoors. You can't fall short on the backyard if you want that top dollar, okay? And because people are going to see that. We still see the homes that people have taken care of, done the decent updates, and then some go overboard. That's fine too. But we are seeing that those are the houses that go. So I know, like, especially Dave Ramsey, prices aren't going down. They are sort of in a lot of areas because they were too high to begin with, because people got, they're kind of coming off of that spring rush. And so things are changing, just a little bit, don't you think?
I think that I definitely want to address that because I have seen the doom and gloom, even lately in the media, saying, oh, well, prices are depreciating. That is not the case. We are definitely coming into a more normalized market, which I know you can attest to. We're seeing prices, homes sell at what they're actually valued at instead of $100,000 over $50,000. That doesn't mean the price of the home has gone down. That just means that people are not paying those ridiculous amounts over the actual list price or the actual value of the home. We're not seeing that near as much anymore, which is a great thing for buyers. It's wonderful. It's really a great thing for sellers too. That created a very artificial market here. But I hate the doom and gloom out there that's saying, oh, prices are going down. They're becoming more normal is what is happening. They're not going down. People aren't losing value.
Well, and when you walk into a house, I tell people, especially, my sellers, people want to feel a little bit of a wow factor. So look at your house and say, what could I do? And it could be something very simple, a new light fixture in the foyer, or something simple where it's a coziness or it's a nice outdoor space, like you said, where you make it enjoyable. And I always say, first it's shelter, you guys. We always talk about these days, it is your shelter. I don't know how many times I can say that first. So make it your own, and then the investment thing will come later. I can't tell you how many times I get, what if the market crashes? I'm like, well, you have a place to live. I don't know.
Absolutely. You still need housing. You're going to need to live somewhere.
And then people say, oh, but there's going to be foreclosures and short sales everywhere. I think that we have fixed rates now. I got a house for sale in that market in Atlanta in 2008 and 9 and 10 and whenever it was, and it took 2 years to sell it. But people now have fixed interest rates. Now, what about ARMs? I want to touch on that real quick because I've seen some people do it, but in maybe 5 years, you got to make sure you're Johnny on the spot with plan.
Right. So ARMs are a lot less prevalent right now. For the longest time, really, the fixed rates were better than the ARM rates out there. So literally no one did an ARM ever. They're coming back a little bit more heavily right now, more so in the jumbo market. I see a lot more educated clients than what we had 20 years ago, 15 years ago, to understand exactly how the ARM is structured so that they're not getting in trouble with that interest rate adjusting. If you were in the business in 2007, 2008, 2005 and prior, there was a lot of 2-year ARMs.
Oh my gosh. Well, actually, that might be better because you could foresee it a little bit, in 2 years.
No, it was not better.
It wasn't? It wasn't?
No.
Because, at least in 2 years, I think I'd be able to keep my job. Of course, I was in radio at that time and, I could get fired at any moment.
Honestly, I think the 2-year ARMs or 3-year ARMs were a lot of the reason for the market downfall. I mean, there was many other ancillary outside factors there, but, people did not, loan officers, they were just selling what they could. We didn't require licenses back then, so anyone could be a loan officer. It was kind of a Wild West type of time, but we're just not in that time frame now. We're just not in that. There's very educated, savvy people. There's tons of information out there. I think loan officers are a higher caliber now to be able to explain that to clients and what the implications of an ARM really are. There are some very lucrative ARM products out there, but none of the short-term ARMs. I mean, the lowest term I see on an ARM is 5 years, but for the most part, most ARMs are 7 to 10 years, which means the interest rate is fixed for 7 years or 10 years, whatever the ARM term is, and can adjust after that point. Well, most people have moved on, by the time that rate is expired. So it's a great product for those who understand it. And it does allow you to get a little bit lower rate than where the fixed rates are. So it's given some reprieve, to some clients right now.
Yes, for sure. And I think that I sort of believe that real estate is right when it's right for you, not always just with what the market says. And if you're put in that position where either you have to move, then don't worry about, okay, well, I'm not going to make any money on my house. Well, yeah, you are. Now, I would say you can't take the money twice. So if for some reason you did have to refinance for whatever reason, but you got to take that money and then 2 years later, you got to sell it, you're not going to have maybe as much equity, but that's okay because it's when it's right for you. So if you have to move out of state or you have to move around the corner, whatever it is, go ahead. Don't let that hinder you. Oh, because, I could make more because you'd get it on the buy side. Chances are. So, weigh everything checks and balances itself. Because I don't think you're ever going to have 100Ks over and then you can go buy a house for 100K less. That's not going to happen. You see what I mean?
No, no. And, with the foreclosure topic, people saying, where there's going to be foreclosures. Why would someone foreclose on a home when the selling market is still so amazing, right? They could just sell their home, right? If you get in trouble with the payments, and obviously that will happen, life happens. But, a lot of people that are in trouble with payments are still able to sell their homes for a profit, take those funds and move on instead of the option of foreclosing. There's short sales. There's lots of options out there that, would avoid foreclosure if that's what people are scared of. So I don't think that's a thing right now in the market.
No, I would say talk to a lender if, you're getting like Cara, and if you're getting in trouble because they can sort of put you back on that path. Call a realtor and see what is in your house. I remember when I first started, I had just gotten here, from Atlanta, and I was showing a short sale and there was this little train table in the kids' room, with Batman toys and, was just left there. And I wanted to pick up all those toys and I wanted to find that family and give them back. And because I had a train table for my son like that. And, sometimes you think that could be me. And so please, reach out because you may have more than you think, or there may be a way out of it so you can get that something that you deserve out of it because you did live there. You made the payments for a long time. So I love that there are so many more options than there used to be, whether you're buying or you think you might be in some issue.
Right. One thing is, people need to take into consideration, one, the write-offs. Obviously, I think that helps offset the payments for people. If their payments are going up or things like that, that means the write-offs are going up, property taxes, whatever the case may be. So I think with the options out there for people, there's many, many, many options to sell. I would certainly talk with an agent first and foremost.
Oh, yeah. And then if you say, you know what, it's not my time to sell, then I would direct you definitely to Cara and say, you know what, then let's see how you could maybe refi it. And I know that you and I've talked about this, where if someone says, oh, we're ready to buy a house, and then you see, you know what, maybe you're not quite as ready as you think, but you put that on their path, because I think a lot of people, what happens is they talk to, Uncle Joe or Aunt Linda, and they say, you should have this interest rate and you should have this house should be this price and blah, 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 blah. But, talk to somebody that's been in the business a little while. There's so many moving parts and they're getting more moving, as things continue. And there's so many different rules and laws and a lot of help. I think more so than ever, more so than you're going to get just Googling it or on the internet.
Yeah. So I'm in this market day in and day out, hours and hours and hours a day, talking to hundreds of clients. So, I think we talked about prior when we were talking at Lauren's event, an interest rate, a loan is not a one size fits all. Just because your coworker or your neighbor or someone got a 3.5% interest rate with nothing out of pocket, that doesn't mean that that's the best loan for you. And that also doesn't mean that you will qualify for that. So, I have people call me every single day and they're like, well, the Fed just raised rates. I'm like, well, that does not directly impact mortgage interest rates. In fact, the last 2 times the Fed has raised rates, mortgage rates have gone down. So, all people see in the market is rates are going up. And so that doom and gloom is like, oh my gosh, well, I was going to buy a house this year, but now I'm not because the Fed's raising rates. The Fed is not raising mortgage interest rates. They're raising the short-term overnight lending rate. So I don't think enough people know that. And I don't think enough people know that an interest rate is specific to your particular situation, not your neighbor's situation, not your mom's situation, not your dad. A mortgage rate is not a one size fits all, and neither is a loan program. Just because one person has 3% down, qualifies for X amount, that doesn't mean that you're going to qualify for X amount. You may qualify for more. We don't know until we have that conversation. So interest rates are not the be all end all on the loan either. I use the example all the time. There's people that you may put 3% down or 5% down. The mortgage insurance may be one rate, but if the loan program has a mortgage interest rate that's a certain percent and then the mortgage insurance is higher, that payment's going to be higher. So it wasn't necessarily the interest rate that impacted that payment. It was the loan program. So, I think people, obviously interest rates are important, but too much emphasis on interest rate takes the focus away from what really is important, and that's your monthly payment.
That's true. And as I tell people, you're going to make more money. You're going to do better, right? And I mean that because, when you talk to people and you see that they're doing everything right, and yet they're still a little bit worried. It might be their 5th house. It might be their 1st house. But because of the way the market is, and it's a little bit volatile that people have in their head, then they sort of just put it all on them. Like, oh no, what if this happens? But worst case scenario is you could sell it. You could get out of it. But if you just keep it up just like you would anything else, yes, you've got to fix things, but there's ways to protect yourself with that. Home warranties, hello, and things like that, your home insurance, and just looking at what you'll get when you leave. And even if you break even on that house, it's still, to me, better to own it, to know I can do what I want to with it. And I don't have someone that's going to tell me, oh, you can't have another service dog or whatever, because you can't tell people that.
You don't have someone walking above your head.
Right. Yeah. That, and you can decorate it the way you want, and you can do things, and you can have a life in it. It's your shelter. And I think that's just one of the most important things, especially as I get older, because that's what I do, is spend time at home.
Right. I feel like I'm at home 99% of the time. So
Yeah. And you want to be in a good place and you want your family to be in a good place too. If that's just one person or if that's just you and your dog or cat or whatever. But I do think that our market is booming. And I was talking to this, same with tax rates. If you have to be in this area, there are probably other areas that are just as good, just as nice. I found out I was looking at something and it said like Lovejoy ranked higher than Frisco in the school system, but in Texas, everybody wants to come and be in Frisco. Well, Lovejoy schools, that's nice out there, but there's other options. So if this area, the taxes are outrageous, let's try another area. Let's find something. And then you can get there eventually, or take the hit and you want your kid in this school or you want this, then do it. Figure out a way it's sacrifice. Let me go back to this, Cara. My biggest thing is love. Like, okay, so you know what the definition is, right? You think you do, but you don't. Here's what it is. Here's what it is. It's sacrifice. If you love a little, you sacrifice a little. If you love a lot, you sacrifice a lot. I sacrifice a lot of things for my family, my son, my dog, my husband, because I love them, so that's, I think, something to think about. So yeah, I'm not going to have the latest and greatest, but my kids are going to grow up and then I will, or however that works for you. But don't be afraid to say, I'm going to give this up to have that.
For sure. And I think a house is certainly where the love is.
It is. Because nobody loves you like your mama.
Right.
You think they do, but guess what?
Oh, trust me. I know this.
And again, we do this every day. And it's just the same thing as when someone says, well, it's like going to WebMD for your ailment instead of going to a doctor, right?
Don't get me started on that.
But our industry has just changed so much. I mean, you've seen the change. I have, because when I started, nobody even wanted to be a real estate agent. I've always wanted to do it, though. I would be on my radio show with the paper, looking at homes and just wanting to know more about it. And, every home has a story. And I just always knew I would end up here. So here I am. And I'm so glad, because I would have never thought.
You made the right choice.
Yeah, I would have never thought in a million years when I moved here that this is where I'd be. And that's why I wanted to do the podcast, because I just love having people on that just know their stuff, that I can say, hey, check this person out. And if they can't help you, they will figure out a path to get you there, which is what you do.
Right. Happy to do it. Still love it after 21 years.
I know. Wow. 21. And we have the connection too, because you're from Oklahoma and I lived in Oklahoma forever and ever, because you're from the Enid area. I'm from the Stillwater area. And I love that, when you connect with someone, then you just automatically know once in talking to them that if you refer to that, they would do an amazing job.
Yeah, I treat every client like family. That's how I was raised.
Exactly. That's exactly how I was raised. Come on in, darling. What do y'all want to eat? What do you need?
What can I get you to drink? Some sweet tea?
I know, right? Oh, my mom makes the best tea. It's so good. Oh, my gosh. Well, you know what, Cara? I have enjoyed the heck out of this. I don't know about you. I hope you did.
Yes, I'd like to come back next week.
Okay.
No.
Oh, good. Oh, yay. Oh, yay. You're going to be on more than you think. I got news for you. So get ready. Okay. So tell everybody how they can get in touch with you.
So carahawkins.com, that's the easiest way. That's my website. It's just my name, CARAHAWKINS. So I'm always reachable there.
Perfect. With Guild Mortgage, she's been doing this a long time. She can help you out. She can direct you. I can do the same, by the way, if you need that aspect of it.
You're in great hands.
Oh, yes, definitely. Definitely. Okay. Well, you plan on coming back. And I hope if you like this episode of For the Love of Real Estate that you will follow or subscribe. We'd love to have you do that. My name is Jill Elliott, and I hope that you will contact me, Jill Elliott, 469-500-1300. I'm just going to put my number on the bathroom wall. How about that? 500-1300, the easiest number in the world.
Probably already there. No, just kidding.
Oh, yeah, it is. I saw it at the Omni. No, I'm kidding. I saw it at the Star.
That's a good place to be.
I totally enjoyed it. And again, if you'd like any more information, just give me a call, 469-500-1300.
Thank you for tuning into For the Love of Real Estate. If you enjoyed today's show, head over to fortheloveofrealestate.biz to join the conversation, access the show notes, and sign up for our newsletter.